Ticker symbol TSLY, or the Yield Max Tesla Option Income Strategy ETF, was pretty much all the hype in 2023 due to the absolutely massive dividends this ETF paid to investors because of the interesting synthetic cover call strategy that Yield Max offers. Now in this video, we're going to talk about where TSLY is trading at as of currently, which hint it's near or at all-time lows as of filming this video. I want to talk about what I think as far as the future of TSLY, and if or if not, I personally think that TSLY is or is not a buying opportunity at these new lower levels. Now, if you hold any shares of TSLY or have ever thought about it, I promise you are going to definitely want to stick around until the end of this video. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now first, maybe for the few people that don't really know what this ETF is, basically TSLY is a yield max option income strategy that references the underlying Tesla stock and uses a synthetic cover call strategy, which is similar to that of a cover call strategy, to generate massive amounts of premium, which are then paid out in the form of dividends to investors. Now, although TSLY has in fact been paying out massive dividends to investors, including myself because I am a TSLY shareholder, ever since the inception of the ETF basically, along with those massive dividend payouts, investors have definitely been put on a massive roller coaster as far as TSLY's price return, or I guess price decay, as you can see right here on the max time frame. Considering back in November of 2022, which is not all that long ago relatively speaking, TSLY was trading at around $20.44, and as of filming this video, TSLY is just fresh off a new all-time low of around $8.73, which on the max time frame is more than a 50% loss as far as price return goes. Now, some investors watching this might be thinking, well, even though TSLY has decayed significantly over the past, say, year and a half at this point, TSLY's massive dividends that have been paid out to investors monthly have to have been able to make up all the lost ground that this ETF has retraced, and the reality is that's just not been the case, and I'm going to show you the exact numbers and if or if not TSLY has even made investors any money if they were to invest it into this ETF right from the start. So stick around for that. Now, it's only fair to mention that TSLY, of course, does reference the Tesla stock, which Tesla stock, by the way, is down around $58 or 24% year to date. Yes, you heard me right. If you haven't been paying attention to Tesla stock, this stock is down significantly year to date, which of course makes a lot more sense on why TSLY, even being down significantly basically since the inception of this ETF, year to date this ETF is seeing more and more pain. Now, if you're watching this video seeing TSLY trading in the $8 or $9 price range and thinking to yourself, well, Tesla is down quite a bit, so is TSLY obviously, but if Tesla begins to recover significantly, maybe Tesla will trade above $200 in the next few weeks, or maybe even way above and beyond that, because as we know, Tesla is extremely high beta, and it doesn't take much for this stock to really start to move in what it feels like just a second in time. If you're thinking that, I want to make something very clear. If we stack up TSLY and Tesla stock on the 1 year time frame, we can see Tesla stock is in the yellow and TSLY is going to be in the blue right here. Now, even though TSLY, of course, does reference Tesla stock, so as you can see by both the charts, as far as price performance goes, both of these charts are moving very similar, and of course for good reason, because TSLY references Tesla stock. But I want to make something very extremely clear here, and this is pretty much the case when it comes to most cover call style ETFs across the market. If the underlying reference stock, or in some cases stocks, begins to, for example, move up significantly, like as we can see right here in mid-May of 2023 to about the end of June, you can see that Tesla stock really had a price move. Tesla stock was trading in the 160s and went all the way up to about 260 in just about 30 or so days. Now, in that same time frame, yield max barely saw any increase. And again, to be more specific, in this time frame, you see Tesla stock up around 50%, and you see yield max's TSLY ETF up around 9.4%. Now, one of the main reasons why this happens is, of course, because TSLY and a lot of these other covered call style ETFs, they are utilizing a covered call strategy. And because, of course, this video is not a video explaining what covered calls are and exactly how they work, I'm going to go over just the absolute basics with this. But basically with the covered call strategy, a strike price is put in place, And if the underlying stock, or in some cases basket of stocks, trade above that strike price and beyond, the covered call is going to have a capped amount of upside, which mostly explains why during times where Tesla, the underlying reference stock for TSLY, moved up very, very quickly and drastically, which Tesla definitely has been seen to do over multiple timeframes across history, you can see that TSLY, although saw some of the upside, a lot of the upside is going to be capped, which means basically if Tesla trades down, TSLY is going to trade down. But if Tesla trades up significantly, TSLY most likely is not going to be able to trade up significantly. Another time that you can see right here, this was just as of October of last year, you can see that Tesla stock is really starting to move again, but TSLY is basically trading sideways. Now I say all this just to make it clear that even though TSLY has paid massive dividends historically, and even though TSLY is trading basically at all-time lows, I want to make it very clear that even if Tesla stock recovers very significantly, which again is the reference stock for TSLY, I want to make it very clear that that doesn't mean that TSLY is going to all of a sudden be trading above $9, $10, $12, or $14 per share, because overall, basically ever since the ETF started, there's been times where it's been up a few dollars per share, but every single time Tesla drops in, it basically finds a brand new, fresh all-time low. And not to bring more bad news into the equation, but also if you look at all the distributions that TSLY has been paying to investors since the inception of the ETF, a lot of the distributions that were massive during the early days of TSLY, which again was less than a year ago now, were much, much bigger, and the last distributions have basically become smaller and smaller as time goes on. Now that's not to say that there is not going to be another big distribution from TSLY in the future, and for me personally, I hope that there is, because like I said earlier, I do own some shares of TSLY across my portfolios. But I just say that to remind everyone that even if you're buying into TSLY simply just for the dividend on a monthly basis, you need to realize that the dividends have been getting smaller over the past few months, and the reality is that we just don't know exactly what the distributions are going to be moving forward. So because of the reasons that TSLY basically for the most part has been shown to have the mechanics of an option income strategy ETF that more or less has been trading down ever since the start of it, and because of the synthetic cover call strategy, which does limit the upside for TSLY, depending on what happens within the time frame where the option is deployed, I think there's a reality that TSLY could continue to trade lower and lower as time goes on, even though it's already down over 50% since the inception of the ETF. Now, for those reasons, I personally have not even been averaging down into more shares of TSLY across my portfolios, where keep in mind my average cost with TSLY right now is around $12 or so per share. Now, to be fair, if I never owned a single share of TSLY, let's say I was starting fresh, let's say I never even got a single share of it, with TSLY trading in the $8 or $9 range, would I grab a few shares as more of a lottery ticket? I probably would do so, to be honest. But I think it's more important to understand exactly how this ETF works, how it's performed so far historically. And the reality is that this ETF still is relatively new, so we're going to have to see exactly what happens next when it comes to TSLY. But lastly, I promised I would show you guys the exact numbers, and these numbers are grim, so hold on tight. If an investor was to have invested $10,000 into TSLY and reinvested every single dividend along the way, the initial investment of $10,000 would now be worth $8,400 and some change, or a minus 15.51% total return. But last but not least, I want to hear from you guys down below. When it comes to TSLY, the YieldMax Tesla Option Income Strategy ETF, are you currently buying at these levels, averaging down, or starting a position? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.